Welcome to the Transparent FX Academy. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And every day on this channel, I share a lot of free education and analysis. So make sure that you subscribe and I will see you on the charts for today's analysis. In today's video, I want to speak about gold. Now, why I want to speak about gold? Because first of all, it is the most traded commodity in the market and at the moment has quite interesting price action and structure. So what I will be doing is providing a complete multi-time frame top-down analysis. First, we will be covering the technical aspect. Then we will go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair, actually on the commodity. Now, starting here on the monthly, we can see how we just got a strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market here has just retraced twice exactly to the 0.618 Fibonacci retracement taken on this monthly impulse, which is a quite strong monthly support and demand area that we can see how the market has already tested twice and from which we can expect the market to provide more continuation to the upside. So here in the monthly, everything seems quite bullish. Dropping down on the weekly time frame, what do we see? Now here in the weekly time frame, we can see that at the moment we are at an extremely important historical structure level for this market. In fact, we can see how the market was respecting this area as resistance here. The market then managed to break above it at that point. As you know, previous resistance is turned support and it has been acting as support here, against support here, against support here, and currently we're testing it once again, and we can expect the market to provide more continuation to the upside. So also here in the weekly, everything seems quite bullish. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestion for new videos. We drop down on the daily time frame, and here on the daily, what do we see? Now, from a daily perspective, what we can see here is that exactly from this area, the market had started all this move to the upside. We then had the break below that zone. At that point, this previous support was turned resistance here. However, we can now see how the market has once again broken above the level. So this previous resistance is now turned support here, and we can expect the market to test this previous resistance turn support and then get rejected to the upside. What we can also notice is that, as we have already said on the monthly, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do this here on the daily time frame, we can see how we have a perfect 0.32 Fibonacci retracement, currently lining up exactly at this important structure support zone, therefore creating a very important liquidity zone for this market that we can expect it to get tested and then rejected to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, we can see how lately net positions were getting decreased. We went from having 216k net positions down to 168k net positions, with currently 125k shorts and 293k longs. So gold overall has been getting quite bearish. And we have seen this clearly reflected in the price action with the market melting to the downside. However, we still have way more longs than shorts. And since we have just broken structure to the upside from a daily perspective, we can expect some accumulation of longs before the continuation to the upside. And we should see that reflected also in the new report, which it will come out in a couple of days. So how we will be approaching this potential longing opportunity with students. Now, as usual, what we will be doing is being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So 4 hour and the other intraday timeframes. So with students, we will be monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and for the market to provide and create a potential higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. You first get all the rules of my rule-based strategies, then you get a new daily market breakdown every single day showing you how to apply these strategies in real-time market, and you also get all your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.